Welcome to the Two Stewards Show. Democracy has its place. Power vested in the people, equal rights for all individuals, freedom, and a voice in the public square. Sadly, for too long, real estate investing has been characterized by the opposite. Centralized power, limited to wealthy individuals or large institutions, accessible by accredited investors only, or those with insider knowledge. How can the average Joe like you or me get access to the time-tested asset class called real estate? Enter Canada's largest real estate investment platform, the bridge between property developers and average Canadian investors. Today we are talking to Steve Jagger, co-founder of Addy, addyinvest.ca. Steve and his team have introduced a digital platform to democratize real estate investing, making it more accessible to a broader range of people. We talk about how Addy works, how you can invest as little as $1. Is democracy in real estate a good idea? Where is Addy headed? Is this the future of real estate investing? To invest in real estate for as little as $1, go check out addyinvest.ca. That's ADDY invest.ca. They also have an Addy app you can download. Go check it out. And if you are a real estate developer looking to raise funds for your next project, you can use Addy to raise capital from a growing group of over 50,000 Canadians. Again, addyinvest.ca. To get in touch, email us at hello@twostewards.ca. Remember, this show is not financial advice, but it is valuable for listening amusement purposes. And now, let's finally combine real estate and democracy.
Well, hello, folks. Welcome to the Two Stewards Show. As always, I'm your host, Mark. Glad to be with you, and I'm here with Brent.
Hi, Mark.
Brent.
Hi, Mark.
How are you today?
I'm doing well.
I feel like it's been so long. It's been, 2 days? That's all right. But today, we have a guest. You don't just have to listen to me and Brent blather on, but you can listen to Steve Jagger from Addy. Is it Addy Invest, or is it just Addy, Steve?
Just Addy.
Okay, just Addy. Well, we're glad to have you anyways. Welcome, Steve.
Thank you. Thanks for having me.
Yeah. So we came into contact with Addy through Rockstar Real Estate, and it's a group that we're part of, and networked through, and we chatted a little bit at the last Rockstar event, and you guys have been on my radar for quite a while. I haven't invested yet, so I don't know if I need to disclose that.
Appreciate that.
I don't have a financial interest yet. We will. Probably it will be with my kids. But it's a very interesting model for real estate. Essentially, it's crowdfunding. I mean, you tell me if I'm wrong, Steve, but what you guys do is and simply not just simply the crowdfunding, but you make real estate investing accessible for everybody. And I guess as low as $1, is that the minimum entry fee?
Correct.
Yeah. So for $50 or $10,000, depending on the limits you have on a project, somebody could invest with you in real estate. And so they're getting the full benefit of leverage as well. Is that correct?
Yes. Yeah.
Yeah. Okay.
Depending on the project, but generally, there's debt on them all. Yeah.
So, because that was my initial, years ago when I kind of heard about you guys, I'm like, well, yeah, it's kind of like a REIT or something. So you're not getting the full benefit of, because leverage for real estate investors is really the secret sauce that spikes the returns. But, you guys aren't like that. You're actually putting money right into a project. So, how did you guys get started? How long have you been around?
We started the company in 2018. So we've been around a little bit. The idea originally was my business partner is a guy named Mike Stevenson. He and I have been business partners for 25 years now across a handful of startups that we've built together. And, we've had a little bit of success over the time. Like we started in 2000. We built a web hosting company. Then we had a real estate software company for like residential realtors, like powering their websites. We built an outsourcing company in the Philippines. We built a payroll software company in the Philippines and Singapore. And so we've been kind of doing things together for 25 years. And as part of that journey, we've had a little bit of success, and we've been personally buying real estate, right? Like, I'm from Vancouver, Mike's in Vancouver, my wife and I, and Mike and his partner, it's like just doing our thing, kind of buying real estate as we sort of got older and started, building families and trying to do our thing, but always kind of independent of each other. And in about 2016 or 2017, I had just moved back from the Philippines. I was over there living with my wife and two little kids. We moved from Vancouver there for a few years, then Singapore, and then came back. And then Mike and I started dabbling in LP investments. Basically, real estate developers ripping down a handful of single-family houses, let's say, building a 5 or 6 story building, and they would usually run around and raise capital from accredited investors who were interested and willing to invest in those types of opportunities as an LP investor. And long story short, an opportunity came Mike's way where the developer, kind of pitched him on the idea. The developer's minimum investment amount was $1 million. So if you wanted to participate, you had to just casually cut a check for $1 million. And Mike liked the deal, but he asked the developer, like, hey, do you mind, like $1 million, pretty aggressive. Do you mind if I can I set up a corporation? I'll put a few of my friends in, like, let them invest into the corp, and the corp will be your investor, basically a small syndicate. And the developer said, sure, like, yeah, you can do that, but I don't want to talk to any of your buddies. I just one investor on my cap table. I'll deal directly with you. That's it. And so Mike said, no problem. So he set up this corporation. He texted me and a few other friends of ours that just said, hey, here's what I'm looking at. Here's what I'm thinking of doing, And I agreed, and a few of these other people agreed, and we put money into that corp. And the way Mike had set it up was the minimum investment into that syndicate was $50,000. So the developer wanted $1 million. Mike had set up the syndicate for $50,000 shares. And so if you wanted one, it's $50,000, two, $100,000, three, $150,000. And one of our employees at the time heard about what was going on and asked, like, hey, can I get in on this? And he had $10,000. And the answer for him, unfortunately, was no, you can't. And he didn't, you'd kind of expect of, like, someone would be like, oh, shucks, and then walk away and, move on in
but you're
life.
too entrepreneurial for that.
Yeah, well, the guy didn't. He was a young man, and he didn't. He was like, "What? This is nonsense. Like, what do you mean? Like, $10,000 is a lot of money. Like, what's the difference between $10,000 and $50,000? Like, he was like, I don't get it. Like, what's the problem?" And so we had to go through that whole conversation of explaining of, like, well, there's costs involved in doing this. Like, wiring $10,000, you pay $20 to send the wire. To receive the wire is $20. The lawyer or notary's got to touch the paperwork, create the subscription agreement, do the transaction. There's a few $100 for somebody to do something on the legal side. Tax slips at the end of the year, each year, if they're required or needed for that, type of investment. Doing investor updates. Like, it just kind of, the list goes on as to these costs. And that's why most of these real estate operators want the smallest number of investors possible for the largest checks possible, because investors are kind of a lot to deal with. And so while explaining that answer to this employee that wanted to put the $10,000 in, it kind of got mine and Mike's brains going on, like, like maybe there's a way to build technology to solve some of these problems, and, like, can we eliminate these barriers to entry? Because some of it's like, it shouldn't be a problem anymore. Like, I get it, 20 years ago the internet wasn't what it is, but it's like, well, now you can automate stuff. Movement of money is, you can do it a lot faster. Why do you need to wire money? Like, now we have things like Interact, or you can use the EFT system, and creating subscription agreements can now all be automated. And, like, there was just all of these things that got us thinking, like, well, maybe there is a way to build a solution to eliminate those barriers so that someone could choose to participate at a smaller dollar amount that suits them, and kind of open up that asset class to a greater population, or greater portion of the population. And so that's kind of how we set out. And so we set out to prove, like, to do that.
The one thing you mentioned was accredited investor, and I don't know if all of our audience is familiar with exactly what those criteria are, but could you speak more to, like, these big deals they're opportunities for investors, but they limit it to accredited investors.
Yeah.
And how like what are those limitations first of all, and then like how can Addy kind of get around that? Because I'm assuming that they have regulations with, if you go lower than a certain amount, if you don't have the criteria, and like I'm assuming your employee, for example, is $10,000, he might not have.
He wasn't accredited
investor criteria. Yeah, so.
Correct. Yeah, so accredited investors basically, there's a handful of ways to qualify. I'll give you a couple examples. Like if you make $200,000 a year or more in the last 2 years, you can qualify as an accredited, assuming your expectation is your income will continue to be at least $200,000, or it could be $300,000 with a spouse. Like if you and your spouse both make $151,000 each, you technically together you qualify as accredited at $300,000. You can qualify with $1 million in assets outside of your primary residence. You can qualify. There's like knowledge-based ways to qualify based on your education level. Like you've done certain levels in education that will enable you to qualify, even though you don't technically qualify on the financial side. There's a whole whack of them that you can look through all the different descriptions and be like, oh, that one fits. That enables me to be accredited, and now I can continue.
So needless to say, the average person is not falling into this criteria.
The average person does not qualify, and it's kind of designed that way in that, private real estate investing, or just a lot of the stuff like investing in tech startups, investing in your buddy's restaurant, like all this stuff is like, it's high risk. And the idea, I guess, behind at least their theory is that if someone makes more than $200,000, it's if you did lose the money or it didn't go well, you're making enough to be able to withstand that loss. And I guess you make enough that you should be able to understand the investment that you're getting into is, I guess, the theory behind it.
You kind of sign the risk away, or you say like, look, I know what I'm taking is a risk, and I'm prepared to handle that. Yeah.
Like I'm a big boy. I understand the risk. I understand the risk of loss. I understand there's no liquidity. I understand I could lose all of it, my whole investment. Like you kind of understand I understand there's no repercussions on anybody. I'm doing this of my own free will. And that's the accredited. Anybody, you can just Google what is an accredited investor in Canada, or throw it into ChatGPT, and ChatGPT will spit it out exactly like bang, 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 all the different criteria that can qualify.
It'll probably point to Addy Invest at the end. It'll say, oh yeah, go check out Addy Investing. Get around.
Hopefully it does. We get lots of leads from ChatGPT. It's great.
You got to sponsor OpenAI. They'll do that for you. Well, there's also lower level eligible investors, right? Which is sort of that same thing, but on a lower level. But and
then below that's retail.
Okay, and so what's below that? Addy?
Well, how does Addy navigate this?
The Addy platform enables all levels, so you can be accredited. We've got lots of accredited investors in the platform that invest as accredited investors. The software gives them access to, sometimes there's opportunities that come through the Addy platform that are only available to accredited investors, right? So it's not available to the retail community, right? Canada's a big place. The provinces all have slightly different rules. There's age of majority rules. Like I'm in BC, the age of majority here is 19. Alberta, it's 18. So an 18-year-old in Alberta can invest, but an 18-year-old in BC can't invest. In our software, we've built all the functionality to understand all these different rules and automate all the rules so that the right person can do the certain things, plus the right person is signing the right paperwork. Like a Saskatchewan resident, there's certain extra little pieces of paper that go into the normal subscription agreement that Saskatchewan requires that nobody else requires. And so our software, we're a tech company, and we've automated all of these functions so that in real time, a BC, an Alberta, and a Saskatchewan resident can all be investing into the same opportunity, and the system is serving up the correct paperwork in the correct fashion. If one of them's retail, one of them's accredited, it does all of that automatically.
And so, it sounds to me like this is really the sort of the secret sauce for your company is actually the tech. Obviously, you need to know what you're doing on the business side, on the investing side. But as far as I know, nobody else is really doing it at this, doing what you're doing at this level. So it sounds like the tech is really the thing that sets you apart.
Yeah, well, for sure. The company's called Addy Technology Corp. We are a tech startup. we're building the sort of the pipes underneath all of this to enable real estate operators to be able to take investors at scale, so they can deal with one-to-many, so they can move money quickly and easily, sign all these subscription agreements, generate tax slips, we're a double-sided marketplace essentially. These real estate operators come onto the platform to use it and make their opportunities available to the investor, and the investor comes onto the platform to be able to have access to these things. But you can imagine all of the pain points that a real estate operator would have, especially like back to when Mike and I dealing with that first guy of his $1 million minimum investment. The reason he chose that is just, it's painful. Like it's painful. Imagine having 50 guys wiring you 50 grand. The wires just show up into your bank account. Your bank carves a little bit of the fees off. But if you had 5 of them arrive in the same day, it just says a bunch of numbers and then the amount that arrived. But you don't know, is this Susan or Frank or John that sent it to you? Like, you have to do all this digging to figure out whose wires arrived, who hasn't arrived yet. Like, it's not super streamlined in managing. And now imagine doing that at scale with, now there's 400 wires coming in, right? And so we had to build all the tech around, let's do it through the EFT platform. Can we enable Interact transfers to be able to do this? And which we've done. So we built all the technology for all of that.
Do you get a fair amount of pushback from the industry, like from developers? Are they pretty receptive to this? Because I'm just thinking, like, real estate in general seems to be kind of a slow moving, like, you have these developers that have been generations kind of building up and doing the same thing over and over again. They got their partners, right? They got like maybe, 15, 20, 50, 100, whatever capital partners that they usually go to. Are you like, is it easy to kind of break into that network, or are you experiencing some resistance there?
At the beginning, very difficult. It was a very sort of full-on uphill battle to convince real estate operators, because you got to remember, like, back in property number 1, 2,
it's like, who are these guys?
We have absolutely no track record. We can't point to anything and say, like, look, this is how it's happened for the last 10 years. Like, we had nothing. So it was a lot of just on our word of like, no, this is going to be great. You're going to love it. Don't worry. Like, trust us. So that was for sure an uphill battle at the beginning of how do we build credibility and trust with these real estate operators. And so we had to figure out a whole bunch of things at the beginning to get them on board, and we can talk about that. But like now, if you look at it today, we're 54 opportunities in, and real estate operators are coming to us for not what you think. A lot of them come to us not because they need the money. They don't need, many of them don't need the money. They're coming because, like, there's one example of an operator who, he's very comfortable raising money. He's got his same normal group of accredited investors, these kind of people that always participate with him. Like, he can do it once or twice a year. He'll be like, hey, here's my thing. This is what we're doing. I've bought this we're going to rip it down. We're going to build this thing or whatever. And these same sort of wealthy accrediteds know him, trust him, and will cut the checks for $500,000 or $1 million or whatever. But he had come to us because he was trying to figure out, how does he enable his employees to be able to participate in these opportunities, right? Because when a deal goes well, everything works out. He builds the condos, sells the condos. He makes money. His accredited investors make money. The employees just kind of get paid what they get paid. And he was trying to figure out a way to enable them to be able to invest in the deals that they're doing the work on, from the people on the tools to like actually holding a hammer and doing things, to the accounting office, to the marketing people, to whatever. Like, how do you get them involved so they've got kind of skin in the game for an amount that works for them? And he had built a structure to allow for this. And what he had found was the vast majority of his employees were not participating in it. And I think it was minimum $10,000 you had to invest. I think he guaranteed your investment. So no matter what happened as an employee, like, you will get your money. He would give it to you. And if you ever quit the company, he would pay you out just so you could move on and not still be kind of tied to your investment from your old job. And like, it was really looked like a no-brainer the way he explained it. And the vast majority of his employees did not participate. And so when he brought his first opportunity onto our platform, at the time, maybe he had 40 or 50 employees, and like 20 or 30 of them chose to participate. And none of those guarantees, none of that stuff existed when he brought it onto the platform. And what he learned, and we kind of learned, was the $10,000 minimum, that was the problem. It wasn't the guarantee. It wasn't if you quit, I'll buy you out. It wasn't any of that stuff. It was just like 10 grand. If you're making 80 grand in Vancouver or 90 grand in Vancouver, like 10 grand is a lot of your income to put into something. And so he started using us as almost like an ESOP, like an employee stock option program, where you could enable this specific community of, in this case, your employees, your trades employees.
Was it a closed group then? Like it was just for his employees? It wasn't available on your broader
No, he did
platform?
make it available to the broader community, but that's the reason he came to us. Like that was the problem he was trying to solve. He had heard about us and saw it, and like in the light bulb in his brain went off of like, like maybe I could use that for not all these other people, but just for like my team that I'm trying to deal with. And so when we talked to him, we're like, well, you could also, open it up, because the problem you're referring to is the same problem as, people that don't work for you also don't have access, also don't, can't hit certain minimums, or don't even know about these opportunities. And so there's lots of reasons like that why these operators come and want to use the system. And now we've got them, like we've got what we call private issuances, where you can use the Addy platform and make an issuance available to only your people, your accrediteds only, your friends and family, your employee, whatever, your little community or your special interest group or whatever. And you'll never see that. The regular Addy community would never see that opportunity on their Addy accounts, because it's just private issuance for those things. And so that's, for us, we're just licensing the software to these special interest groups that are like a church group is trying to buy 2 single family houses next to the church because they want to rip them down and build a hall or something. Or a union's trying to build workforce housing and they want to enable the union members to invest in the workforce housing so you can be a part of it, like the landlord side. There's lots and lots of these opportunities that these different groups are using the platform for.
Yeah, this is a really, really exciting opportunity, I think, for everybody. But so just want to key in on, you said access, and maybe you could go into a little bit more about that. Like, if you don't have a lot of money, so I just had a guy in here today, and we were talking about, so he bought his first property last year, and he really enjoyed the process. He wants to invest more. He's tapped out. He doesn't have enough income to be able to buy anything in the foreseeable future, but he has this bug now where he's like, I like real estate. I'm really passionate about this. I want to do something else. I have, maybe 20 grand left over. What can I do in the meantime while I'm saving up or while I'm building equity so that maybe one day I can do another deal or something, right? Outside of like joint venturing or going to raise money yourself and building all that network and skill and whatever. Put my money to work now. So how would something like Addy help a guy like that who is in that situation?
Yeah, and I think that's kind of the point. If you've got 20 grand and you want to invest, normal world, that's not enough. No. Like in this specific real estate world of LP investing or whatever, like 20 grand, like usually your bottom numbers are like, maybe it's 25 grand, maybe it's 50, usually it's 100.
Even outside of LPs, like even if it's just buying a house as a long-term, like that's even higher than
even worse. Yeah, worse. Even worse. And I'm from Vancouver, so I get it. My view on like a tear down house in Vancouver that's garbage is like $1.7 million. Like the whole thing is nuts. Yeah. But yeah, 20 grand, you're not going to get you're not going to get very far. And in our world, this is why I think the neat thing about it is you could do $21,000 investments. Right? You could skip some of these things that you don't like, put $2,000 into this, skip the next one, put $500 into that, put 1,000 into this. Like, it's a totally choose your own adventure platform where you can, pick these opportunities, pick based on location, who the operator is, what their time frame is, what their projections are. Is it projected to cash flow or not? Is it a development? What's the risk level? Right? It's all considered high risk, but like a development versus a cash flowing property, like they're different. But that's the idea, is that you can create an account and just like choose what works for you, and break that 20, in this case the 20 grand up, break it up however you like.
Are there maximums for projects? Do you set those?
There's
Like
a few
Mark,
ways
Mark
that,
wants to go in and buy out your next one. So
Yeah, I'm all in. I'm all in, Steve.
yeah, just the chips are it. No, there are different ways that maximums can happen. So the issuer can choose their maximum of obviously like, hey, we're only raising this much money, and then depending on which way that they are running their campaign, if they're using crowdfunding regulation restricts retail, like investors, up to $10,000 per investment into that opportunity. But there's still there's exempt market dealers that are in our software that are reviewing the transactions to make sure for suitability and all that stuff. So just because you can, or the system says you can invest up to $10,000, the EMD might say, no, no, you're qualified. You can do 2 or 4 or 3 or 50, whatever. But crowdfunding regulation enables you to do up to $10,000 per property. If you're using, offering memorandum, there's no limits as far as the investment amount. So it's and again, like the issuer could say what they want the limits to be, how long they want to run their issuance for. Again, there's limits on how long it can go under crowdfunding. You've got 90 days, but the issuer might say, well, I'm only going to run it for 4 weeks, this campaign, right? They can choose those things. But yeah, and all of those functionality and features are built into the software. So the system can do the work of enabling accredited investors can go above the 10,000 because they're investing as an accredited investor. And if you're set up as a retail investor, it'll cap you at the 10,000, and then the software funnels all transactions through whichever EMD is on that issuance. And
so if somebody's never actually done an investment in one of these LPs or a project like this before, like maybe explain how, like if let's say I put my $5,000 in and the deal goes through and it's all fully funded, like, is there a time period? What am I earning interest on? Is it different for every project? Like, how do I get my returns? How long does it take? Is it kind of just like you mix and match or is there like kind of an expectation that everybody has, and like what's the risk level? Is that varied per project? I don't know. I could ask a lot of questions.
Yeah. So
everything, Brent.
Each opportunity, they're all considered high risk, right? Investing in these private real estate opportunities is by default all considered high risk. When you're and each deal or each opportunity is different, right? Like you can have you have 2 identical buildings. One's in Calgary, one's in Vancouver. They will perform differently just because British Columbia has rental restrictions. Alberta does not. So even if it's the same operator, same building, same everything, same tenants, everything, it's just that one slight difference of it's in a different province can change how that opportunity may or may not work. And so when an opportunity comes onto the platform, there's an offering document that is there. It's meant to be a summary of the opportunity. It's meant to explain the risks so the investor can read the risks and understand what they're getting into, as well as understand the plan of like, what's the plan? What are these people going to do with the money? Are they buying the building? Are they building the building? Are they just running a cash flowing property? Are they buying a building that's almost vacant, needs a lot of work, and they're going to rent it out? Like, how are they going to do that? Like there's the plan section that kind of breaks down and explains how they're going to run their property. And the investor's job is to read the offering document, look at the due diligence, look at the projections, timeline projections, and then just make a decision of like, no, don't like this at all. Like, I'm not interested, or yeah, I'm interested. And then like we enable people to invest as little as $1. And it's kind of this like misnomer. Sometimes people get like, you guys just like a marketing thing. And it's not meant to be this marketing thing. The point of what we're doing is eliminate barriers to entry. And by making the platform enable people to invest as little as $1, it's like, it's your choice. So $50 is a good number for you. Great. Like, we don't want to have a minimum 500. You have 400, and then you're like stretching your way into a $500 investment that maybe you shouldn't be doing. But because there's some investment minimum that you're trying to figure out how to achieve, by making it that $1, it's you pick. Like you decide as the investor, like what works for you, and there's no wrong answer. Like if it's $5, good for you. That's great, no problem. If it's $50, if it's $5,000, like whatever it is, and that's the purpose is choose your own adventure. No pressure to meet some arbitrary minimum. Pick an amount that suits you.
Yeah, and then on the back end, like I'm just thinking, if I were to administer a deal with $1 invested at a time, like even just the transaction costs, and like you mentioned off the top, right, all the costs, the lawyer, whatever, like how do you deal with a $1 investment without stripping all of that with all the fees and charges and whatever else?
We've automated it all, right? So like
that's a secret you can't share.
Well, no, we've literally automated all of it, right? Like if you the software is big, it's complex. We basically take a very complex world and make it look streamlined and lovely on the app. So you can move money, you can sign a subscription agreement, you can do all of these things, and it looks and it functions fast, and it's I think a beautiful experience. Obviously, there's always more work we can do. But if you understand the world of how, like, what the machine is doing underneath, there is a lot going on, right? Just for anybody that's ever created a subscription agreement, right? For someone's going to invest in your deal, I say, hey, I'm going to put 50 grand, Mark, Brent, I'm in. Here's my details. And you'd say, great, what's your address? What's your SIN number? What's this? What's that? Like all these things, I'd send it to you. You'd sit there typing it into a document. Then you'd put it into DocuSign. Then you'd put the signature blocks and the initial blocks on where I'm supposed to sign. Which thing am I supposed to check off that says which category of accredited am I? Like all the stuff. Then you're going to get my email, stick it in there, send it to me, right? That'll take you half an hour at the quickest probably to do that. We can spin those out, thousands of them in seconds. Like it's just automatically created in real time, super fast. Right? We had to build our own signature technology. At the beginning, we had APIs for HelloSign for signing technology, but HelloSign was charging us $3 or $4 per signature just for the signature, right? Yes. But at the beginning of the business, when you're kind of stack ranking priorities of things we need to build and automate, the signature wasn't the biggest deal because we didn't have scale yet. It didn't matter at $3 or $4. It was like, great, that's a problem, but it's a problem for another day. But now when people sign, they're using Addy Sign. We've basically built our own signing technology into the software so we could eliminate that cost of $3 or $4 just for the signature. Doesn't work at scale. And we've done that across everything that you can imagine. The movement of money. We can move thousands and thousands of transactions for $10,000 to $10 million. Doesn't matter. We've automated the process for moving money in and out of the system every day. We had to do it again to move money for US dollars in and out of the system. Accepting Interacs. We had to build all the functionality to accept Interacs so people can email money into their wallets. Right? It's just, it goes on and on and on. But that's what enables people. So if someone does do these small dollars, we figured if we could make the software work and it made sense for a really small dollar investor, if it worked for that small dollar investor, then the business will work because we've been able to automate it enough to make it financially
that's incredible.
To do this.
That's really incredible. I think that's really cool achievement. And I'm just curious how you guys get a cut, and where does Addy kind of make their money in the process? Is it off the investor or the developer, or how does that work? Like are you licensing the software?
Yeah, so it's a good question. At the beginning, we charged nobody anything. No, nobody paid. Nobody paid a dime for anything. But I said, like at the beginning, it's like we were just trying to convince real estate issuers to use the software to come onto the platform, and they were like already a little nervous about the concept of giving this thing a shot. So it was hard to say, and you're going to pay us for it. Like we were having to convince them to give it a shot. So we didn't charge them. We didn't charge investors. We didn't charge any. We lost money on all of it, subsidizing everything.
What does your wife say about that business model?
Well, it's like
I believe in you, honey.
Yeah, well, it's we've got investors in the company itself, and it's like it's the investment that needs to be made to build and start scaling this thing to get it to where you're operating at scale with thousands of transactions.
It's like Amazon, right? You just lose money and build market share
until it flips over. And if you look at us today, so today we license the software to real estate issuers. Right, so these real estate operators that come onto the platform, they pay a fee to use the platform for a private issuance or a public issuance. They're licensing the platform to do so. The exempt market dealers that are in the system license the software to do so that they can do their piece and use the software for it. And then on the investor side, investors don't pay anything to use the platform to invest, nothing. We do have a membership model that we charge $50 per year to be what we call an Addy One member. It's not required. You don't need it. You can invest without being on it. The Addy One membership gives you basically benefits of the software. It speeds up money movement. It does a few things in the app to show your portfolio in a bit of a different way. And so some people choose to pay that $50 per year. But again, not required.
It's not like you get exclusive access to different deals or something like that.
No, not for the membership. There are people that get exclusive access to deals, and that's the accredited investors, because some opportunities are private issuances and they are only available to accrediteds. So those accredited investors in the software do see exclusive deals because they're only available to accrediteds.
Yeah, and I got to imagine, like, just having one partner to deal with in an LP setting, like, what a load off, right? If you're used to raising money and having 5 or 10 or however many partners, and now it's just, I mean, are most people just, if they have a project, if they're an issuer, are they coming to you and they're just using Addy for that project, or they have other investors as well? I mean, it seems kind of dumb, but
sometimes it could be both. Sometimes they're just using Addy and they're funneling their investors in through the platform. Other times they have outside investors that have come directly through them, and then they're using Addy for a portion of the equity stack. It really depends. Like, literally each deal is different.
Okay.
And who the operator is would kind of dictate some of these things and why they do it and how they do it.
And so you guys, I mean, okay, let me go back. Investors have to look at the deals and make sure that they're suitable, but you underwrite them as well, right? You're not bringing in, I would assume, lousy deals.
So we underwrite them for ourselves, right? We look at the opportunity from sort of Addy's behalf, not on behalf of the investor, right? We can't give investment advice. We can't say this deal's good for you, but it's not good for Brent. Like, we don't do any of that. So we pull together the information that we want. We put that information into the app so that you guys, both of you, can log into your account and you can read the offering document, look at the appraisal, see all the stuff, and then you make your own decision. Just because it's on the Addy platform does not mean it's good or qualified for you, right? It's up to each individual investor to make that decision for what's suitable for them, for their tolerance, for their risk level, for their timelines, for all of it. So, like, hopefully that answers your question. Where we do it, but and we've learned over time, like we've continued to refine our processes as we've learned and grown. Example, we've put out there was a couple blog posts that went on our blog about, okay, we've learned these things and here's how we've adjusted and here's what we've put onto the platform and here's now what you're going to see. Like, court searches now show up. Letters of attestation show up from the issuers. We didn't do that at the beginning. Now the issuers sign, all the directors sign a letter of attestation about, have I been sued? I'm in the middle of a lawsuit, and they sign this thing. That's in the due diligence thing for all investors to look at.
Okay.
We pull title at the beginning of our due diligence process. We pull title before money moves. So when the issuer is closing their funding round and sort of running through the closing process with the exempt market dealer, we pull title again, and then we pull title annually and just put the title into the due diligence room every year on every investment. And so we're doing that just so that all investors should be doing that themselves anyways on their investments that they've made. Most probably don't.
Yeah, it's like, turns out you don't own this anymore. Oh.
Yeah. And it's just like meant to be like, well, this is like part of being on the platform, is the title will show up in your due diligence each year for you to look at and you to make a decision. Is it good? Is it bad? Was there a change? Does it affect you? Does it scare you? Is it everything's fine? But that's the purpose of it, is just make the platform a service to the investor, to the issuer, to the exempt market dealer, so that they can use the automation and deal with lots of different people at scale.
Yeah. Okay. Quick question. Can you accept registered funds? So
No.
Can somebody take money from their RSP? No?
Not
It's
yet.
got to be
Cash.
like free
Cash only right now. Yeah.
cash on. Okay. All right. That's good. Okay. So you've got a great concept, Steve, and it sounds awesome. Works for a lot of people, but like, how have you done actually? How have your deals performed? Because I think that's probably the next question that most people would want to ask, right? Like, that's great, but does anybody actually make money, or should I just stick with the S&P 500?
Yeah. So there's been 54 opportunities on the platform at this, today, as of right now, recording this. There has been a handful of exits where investors have, gotten some sort of return from their investment. There's been a handful of failures, or properties that didn't perform as expected but did have an exit. When the investor community, like when you sign up for your Addy account, you can click into the properties tab within your account. All 54 opportunities are there. The ones that are gone and sold out and done, they're still in there so people can see. We have a very active Discord community and Discord server, and one of the channels in the Discord server is the tracker, and it's like you can literally click on it. It pops open a Google document that has all 54 opportunities on it, and it basically shows how much equity went in from the Addy community, how many investors, average investment, how much outside equity was from somebody else. If the ones that have exited, did they exit? What was the return profile of the exits? If they failed, what was the return profile or the negative return profile? I would think we're a pretty transparent platform for people to be able to do that kind of due diligence, and you should. Not that past performance dictates future performance, but I just think it's good for people to see, like, there's different operators that have gotten into trouble for different reasons, right? There's different regions that have gotten into trouble. There's different categories of properties that do well versus ones that don't do well. Like, look at Ontario right now in the pre-sale condo space is like not looking good, right? Or when interest rates started to ratchet up relatively quickly, some of the operators on the platform were prepared for that kind of stuff, know what they're doing, had contingencies. There was one group out of Hamilton that had a lot of trouble with that. They had a whole bunch of properties with variable rate mortgages. A handful of them were on the Addy platform, but they had lots of other properties, and they were just trying to figure out what was going on. They were underwater on a whole bunch of properties, and it's really damaged their business significantly. But there's, like, the opposite is also true. There's other operators that don't run it like that with variable rate mortgages. One of the things we changed off of that learning when that one group got into some trouble. Now, when you look at a property in the platform, the system will show you what the mortgage is on the property. Before, you'd have to go look for it or dig or ask the issuer the question. Now it's right there in the app that says, what's the term, what's the mortgage rate, is it fixed rate, variable rate. It's all bubbled up because of the learnings of wow, interest rates ratcheting up super quick can be a danger point, right? And so that's the whole idea, is so that people can make informed decisions, check out these operators, check out their past performance, check out what they do, how do they talk to investors. Are they on time with investor updates? When they project dividends, do those dividends happen? And I get it, things happen, things change. Look at what happened with COVID. I learned a ton during COVID. I didn't realize, I thought about when a pandemic was coming. I remember when it was starting, I was like, what does this even mean? I get what a pandemic is, but I'd never lived through one. I didn't know it was going to go, they're going to shut everything down and close all. I had no idea the scale of what a government would do in that. And I learned, I was like, wow, so liquor stores, drug stores, and grocery stores, that's the three that are allowed to operate, right? I would have never guessed that the liquor store would be in the same category as the drug store, as Shoppers Drug Mart. I didn't, And we learned we have that Starbucks in Chilliwack that our community had invested in. And remember, all the retail, everything had to close. That Starbucks has never closed because it had a drive-through. So the store was closed,
okay,
but the drive-through. And so it was that was good learning. Thank God for the drive-through, right? There's other Starbuckses that are in a strip mall with no drive-through. Those ones had to close. The one that we're invested in, or I'm invested in, and the community invested in, didn't because of the drive-through. So it's like there's all these learnings. Some of it's a fluke, pandemic. Some of it's not, like interest rates, or look at like fires or floods. There's a million things that go on that can affect these opportunities. And part of it, for me at least, when I look at them, is like, well, how does the operator deal with challenges, especially real estate development is not easy. Like there's every day there's a challenge with what they're trying to do. There's always something weird going on. Like one of our developers, the guy was talking about this development he built in Maple Ridge. When they started digging the hole, they found this like underground stream that they didn't know was there. And then it created this huge water thing that they had to then, it's like, you got to figure it out. Like, wasn't in the plan, but they that's part of the development world. It was like, great, now you like, how good are you at problem solving? What do you do to solve a challenge like that?
Yeah, if you want to own a tangible hard asset, well, you're gonna have to do some work for it and figure out these problems along the way.
Yeah,
where do you see Addy going? Because like you've been doing this since 2018. There's a ton of tech development that's happened. I'm assuming the development that's happening now is more like building on top of this, building the network and growing, marketing the brand. And like Mark mentioned too, you have some deals in the States, further expansion. Like, where do you see Addy going in the next little while from a business perspective?
There's 50,000 people on the platform now, Canadians. We're only open to Canadians. I want 1 million, right? I think there's a way to enable more and more and more people onto the platform. As far as like the types of opportunities that have come on, we started by enabling real estate operators to bring equity opportunities. Then we started enabling them to bring debt or private credit opportunities. The first hard money loans come onto the platform. The first land loan has come onto the platform. We let the first fund. At the beginning, we didn't let funds onto the platform. We did let the first fund, Scott McGilvery's fund, came on the platform. We're about to, another one's about to launch that will come onto the platform. These like those private REITs. They're not a public REIT, but a smaller private REIT that comes onto the platform. And so growth of the products from that point of view of enabling the investor community just to have more choice. Like some people like the debt and only debt. Some people like cash flow and only. Some people like Vancouver and nothing else. Some people hate Toronto, love Vancouver, or love Toronto, hate Vancouver, or whatever. Some people hate them both and just want Alberta. Right? Or some people just want cash flow or just want America. Like that's the whole point, is to give, more opportunity on the platform. And then, sort of future is we're layering in, more accredited investors are now showing up onto the platform because of these private issuances that are on the platform, right? So the accrediteds can get access to opportunities that are exclusive to them. It enables these operators to use our software for those private issuances, and they can get the benefit of the automation and the platform for what they're doing. And then kind of the last sort of piece is we're sort of seeing a lot of these special interest groups, like I mentioned before, around like with this Health for Health initiative that's coming onto the platform. You'll start to see more about it, where like doctors can invest in rental housing that will be created to be rented to, young or new healthcare workers so they can live near the hospital. Special interest groups like First Nations groups, or like I mentioned, churches, right? The church community across all the different denominations, lots of them do a lot of stuff in real estate, right? They're building halls, or they're building a new church, or they're buying residences, or they own a few rental properties that they use for cash flow to fund operations of the church. There's that whole, like there's schools. Lots of the private schools in Canada own a lot of the houses. Not a lot of private schools. Some of the private schools own houses around the school so that they can not only attract teachers, but they can provide them with housing near the school. I think we're going to see more of that, where like the public system's probably going to have to get into that, where like we see it in Vancouver. Like a lot of the school teachers in Vancouver live an hour and a half away. Right. And it's like, no wonder they don't want to help coach basketball or soccer or football after school. They've got an hour and a half drive. Like, they want to get home to family and dinner and stuff. And so what if there was a way to enable housing near the schools, where the teachers could live there and the hospital workers could live near the hospital? And like, there's just all these categories where you can
Well, just to dip
use
into
the
that
software for it.
just to dip into that for a second. So if you have a school that wants to house a teacher nearby, like how does Addy kind of bridge that gap? Like the people who would support the school might fund like that specific project through Addy, and then there's a developer that.
Yeah, it depends on what the structure is. So we're always the software, right?
Yeah.
But so if there's a school here in Vancouver that owns a handful of, this is a private school that owns a handful of houses near the private school, and they rent those houses. So they don't need a lot of these houses don't need a lot of work. They're good houses. It's not like they're old beat up houses. They need to do massive renos or rip them down and build something. They're just good houses. And instead of, whoever bought them moving in, the school's buying it and then they're renting it for market rents to the teachers. Right. And it's just a way for them to attract teachers, where a lot of the teachers are like, oh, I'd love to work there. You're paying a great wage, but I just can't. The average house around this school is $2.5 million, right? $3 million for the average house. So no matter what you're paying the teachers, not enough to do that. And so that's the way that they look at it as attracting talent to the school is own some of these.
So, but then how does Addy? How does Addy, so like if I'm a school, can I just buy a house? Like what do I need Addy for to bridge that?
So it depends on how much money your school has. Right. Some of these groups that are talking about using the platform for that example is maybe you're buying a $2 or $3 million house. Maybe you're going to buy it with cash, right? No mortgage on it. And you don't have the cash to do so, but you have a decent sized community, parent group, alumni group. And maybe the alumni and the parents are like, well, I don't want to donate money, but I'll throw $1,000 at this idea of enabling the teacher. And maybe the neighbors want it too, because the neighbors like the idea of the kids being kept busy after school and in sports because the teachers are willing to coach some stuff. And so maybe you're investing in that single family house and it's a 10 or 20 year plan and it's not a donation, it's an investment. And maybe you get exited in 10 years or 5 years or 20 or whatever, when they reappraise it and slap a mortgage on it to buy out their investor group. There's lots of different ways to look at how you would structure the opportunity. But we're seeing it across the board. Like I said, like workforce housing, not just schools, like unions are trying to figure this out. Like Whistler figured this out years ago. Whistler Ski Mountain had a huge problem where none of the staff, like the restaurants there's nobody to work there because they couldn't afford to live there. It was just too expensive, and Whistler's not very big, and that nobody, like all the lifties, they couldn't live there, and so the Whistler Blackcomb couldn't have any, so they had to build workforce housing. So they built a bunch of workforce housing so that if you worked at Earl's or the restaurant groups or for the mountain itself, they were able to also provide you with housing so that you could live in this very expensive, exclusive, fancy, awesome ski village.
Now I gotta get over there and go ski or go snowboarding. Yeah.
But it made a lot of sense. Yeah, and it was a problem they had to solve. Like it didn't work. It was like,
could that be a business trip if I go there and just kind of say, I'm checking out what Addy invests in, or like that I work for his house.
Yeah, just here doing some research.
There you go. We'll meet up there and check it out. You can kind of give me the tour.
So I'm just thinking the wheels are turning a bit, because we had a little while ago we had the CEO of Indwell, which is a nonprofit housing,
supportive housing.
Supportive housing. Okay.
Yeah.
I don't think they make profits though.
No, nonprofit, but they do housing and support for the people in there. Yeah.
Right. And so they do a ton of fundraising. But I mean, this could also be, like, from Addy's perspective, you're not concerned really if the project is turning a profit or whatever, as long as people are paying their fees to be on the platform. So could somebody could they use this also for just, having a bigger base of fundraising? I think it's kind of what you're saying with the school as well, right? Yeah,
and we've seen this. So there was a project that came onto our platform in Hamilton, Ontario, and the developer is building I was going to say, don't quote me on the numbers, but I get it. We're recorded, so you're going to quote me on the numbers. But I think it's like a 96-unit purpose-built rental. A whole thing is 100% affordable housing. Is that the one on Houston? No. This one is on, I think it's 405 Main Street in Hamilton. Okay. And they brought the issuance onto the platform, and it was put up as your investment. Your primary reason for investing this is societal gain. Your secondary reason is financial gain. So if you're cool with that and like you get it, that the first goal here is to create 96 units of 100% below market or affordable housing. The secondary goal is hopefully like also create a bit of a profit. But you know, obviously you'd make more money going into a normal deal. That's the primary reason is a financial gain. And that one came onto the platform, and we've always been interested in this kind of stuff to see like, well, what does the community do? And there was like 1,200, or I can't remember the exact number, 12 or 1,300 that people chose to invest. The average investment amount was down, which we kind of expected that would happen, but they still supported it and chose to make that investment going in with their eyes wide open of like, I get it. Societal gain here is the primary concern. Financial gain is secondary. And that one for us really validated of like, all right, the community is interested in this kind of stuff. We will see more of that. And that's where a lot of the special interest group stuff is coming from, where the return profile might not be the reason you invest. Like maybe you're interested in investing in housing around public schools to enable teachers to live there. And maybe you're just one of the neighbors because you like the idea of the kids like having something to do for a couple hours after school instead of spray painting your fence or, you know, getting into trouble. It's like you want the teachers around, and like the end result is like, yeah, they'll happily coach because they can also walk home for dinner at the end of the night and they don't have to drive everywhere.
Yeah, that's an advantage with like when you have money to invest, you can put it into something you believe in, right? And if it's like for me, I'm in Ontario, Hamilton, and if I want to invest in Calgary, for example, like it's so detached. I might believe in the investment thesis, but if I can invest right in my own backyard in a neighborhood that has an impact, like maybe that means more to me, even if the returns aren't as good, right?
Totally.
So you can make that decision. Do you guys see yourselves like using this technology or branching out into things other than real estate, like other any kind of investment opportunity outside of that space?
No, not right away, or not now. we get asked all the time, all the time.
Well, I'm just curious. Yeah,
you could, right? Like you're buying LP units, you're buying shares of an entity that own an asset. The asset could be a Picasso, it could be music rights, it could be a Hollywood script, it could be a yacht. There's a million things the asset could be. Technically, the structure is similar. Yeah, and you're just changing the asset underneath. But no, for us, like we've got lots of work to do. Real estate is good.
I just think like crowdfunding. When you think crowdfunding, you think like Kickstarter, like these small kind of entrepreneurial, get my first kind of round of, capital so I can go, do my project. And that's kind of where this, I don't know, in my head, crowdfunding started in that space, right? And then you're just focusing on real estate. Okay.
And we're a bit different than like the term crowdfunding is like, if we hit this level, we'll do this thing. Yeah. And we're more of like an investment platform where these issuers are using the platform for the benefits and the automation and the speed or the movement of money or the tax slip general, all these things. And it in many cases, it has nothing to do with them being able to make their project work or not, because they've got the ability to raise the capital, with or without it. They're just, they're using it for other benefits.
If you have a deal that, if I have a development project and put it on your platform and it doesn't fully fund the deal, do I still take that money and come up with the rest somewhere else? Or how does that...
When an opportunity comes onto the platform, if it's using crowdfunding regulation, you have to state what your minimum is and what your maximum raise is. In crowdfunding regulation, you can raise up to $1.5 million in a rolling 12-month period using the crowdfunding regs. But whatever your minimum is, you need to be able to defend the minimum in your offering document so that it makes sense, right? Like if you're buying a house or a property or whatever for $1 million and you're going to rip it down and do this thing, and you say the minimum is $500,000, logical question would be, well, if you only get to $500,000, how are you buying this thing for $1 million? How does it work? And maybe you've said in the offering doc, I've got the money to do X, Y, and Z, or I'm the other part of the capital, and here's the minimum. There's offerings that have come on where the building exists. They're doing a bunch of upgrades to the building. And they've said, our minimum is this much, the maximum is this much. And if we achieve the minimum, we're going to do these upgrades. If we achieve $200,000 over the minimum, we're doing the base upgrades plus the new roof. If we get to here, we'll do the base upgrades, the roof, and we're repaving the parking lot. And it's so you can kind of see, okay, I get it. If you get this far along, you're still using the money for what's expected for the certain levels of what you're trying to do.
Yeah.
But that's all explained in the offering document around what the minimum and maximum is.
Yeah, I tell my wife that too. Like, if we hit this number, we can get a minivan. We get a minivan. You can have extra space for all the kids in there. So I totally understand that concept.
Yeah, the minivan is the dream.
Yeah, we're still in like a
very
crossover.
important question, Steve. Do you or will you accept Bitcoin?
So Jeff
This
Booth,
is a Jeff Booth question.
yeah,
Yeah, 100%.
he
graciously came on our podcast, by the way. It was
Oh, he did? Good.
Pretty exciting, yeah.
Yeah, so he is obviously pretty jacked up about Bitcoin.
Did it rub off on you or no?
Yeah.
Okay.
Yeah. He, like he's our third co-founder, right? It's me, Mike, and Jeff. And so one of the concepts we're playing with is, wouldn't it be neat if you could invest money in a property, like a cash flowing asset, like a hard, apartment building or something that's just, it's projecting to do dividends of some sort. Wouldn't it be neat if you could like log into your account and choose to have the dividends come to you in Bitcoin, not in CAD or something?
Yeah, I
so
would
you put your
invest.
$5,000 in and you're getting your whatever $5 a month or 10, whatever the numbers are. And instead of the CAD leaking back into your Addy wallet, it comes back to you in Bitcoin. I don't know if people would want that, but it's like a way to potentially hold your main investment in this hard asset and start growing your Bitcoin holdings through
I feel like
a leak into it monthly or quarterly.
I feel like I would invest more, and I got $100 in my wallet on the Addy app. So for people, I have put $100 in there, and I haven't got to the point of deploying it into the thing. But maybe if I could receive the funds in Bitcoin at the end of the day, it might even be the extra step I need.
You know what? You guys could partner with Bull Bitcoin, because I'm sure they could just add you as a bill, because they'll allow people to do that, right? You can just pay bills with your Bitcoin and they do the transition. So, you can invest in Bitcoin and then get dividends back in Bitcoin. That would be cool. Okay, well, I had to ask about it, Steve.
No, it's fair. That doesn't exist yet. This is just an idea. So it's always dangerous, talking about something that does not exist in the software.
Yeah, people
All
are
our
like, "Where is
engineers
it?"
will be like, come on, guys! That's not a feature. It's not a thing yet."
You heard it here, folks. Next quarter.
Yeah,
Bitcoin
breaking
investments. Okay, well, we're getting towards the end of our time, Steve. Brent, did you have any final questions?
No, I'm excited to kind of get this one out and get some listeners to join the platform. And it's hit 1 million. What do you say? 1 million users is the target.
That's what we'd like. Yeah.
All right.
Yeah, we need everybody on board, participating, choosing their own adventure. Getting involved in owning real estate.
Yeah. Well, we'll get all our listeners in, so that'll be like another 5 people. So that's 5 more on your path to 1 million, Steve.
That's awesome. All of them matter.
Yeah.
Yes. Where can people get a hold of Addy, or what's the website?
You can go to addyinvest.ca, create an account. It's free. You can download. There's an iOS app for Apple, and there's an Android app.
Yeah, okay.
All the social channels, all the normal.
Yeah, and you've got a podcast as well, right? And that's mainly you and guests?
Yeah. We bring on different guests each week that are in the real estate space, the developer space, the investment space. Just having conversations around what's going on, what do they think of the different markets, what's going on in the development world, what's going on in Ontario or Calgary or whatever. Just trying to help people be curious and learn more about what's happening in this real estate world.
Yeah, we'll link to that in the show notes for sure.
Yeah, it's the Addy Show, I think, right?
Yep.
Yeah, okay. Available on all your fine podcasting platforms. Thanks, Steve. This has been great. We appreciate it. And we'll point our listeners towards Addy. Wish you guys all the best. And until next time,
steward your wealth wisely. Thanks for listening to this episode of the Two Stewards Show. If you like my voice better, click subscribe.
If you like my voice better, click share.
If you like both, give us a 5-star rating.
To learn more about the show, head on over to twostewards.ca and explore our free resources. To interact with the show, feel free to reach out at hello@twostewards.ca.
We will see you in the next episode. In the meantime, steward your wealth wisely.
Nailed it.